Hello and welcome to the LP Financial Services Forex training class, Introduction to Fundamental Analysis videos. We're ready to continue with Lesson 4, Understanding Economic Indicators, Part 2, the Major Economic Indicators, and we're ready to talk about the Consumer Price Index, or CPI. This measures changes in the price of goods and services purchased by consumers. Consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandates. The usual effect is, as the CPI goes up, the currency goes up. Our next major economic indicator is the Producer Price Index, or PPI. This measures the change in the price of goods and raw materials purchased by manufacturers. It is a leading indicator of consumer inflation. When manufacturers pay more for goods, the higher costs are usually passed on to the consumer. The usual effect is, as the PPI goes up, the currency goes up. Our next indicator is our trade balance figures. Trade balance measures the difference in value between imported and exported goods during the reported month. Export demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices for domestic manufacturers. The usual effect is, as the trade balance numbers go up, the currency goes up. Our next indicator is our industrial production figures. This measures the total value of output produced by factories, mines, and utilities. Industrial production reacts quickly to the ups and downs of the business cycle and can be a leading indicator of manufacturing employment, average earnings, and personal income. The usual effect is, as industrial production goes up, the currency goes up. Our next indicator is our durable goods orders. Durable goods measures the total value of new purchase orders placed with domestic manufacturers for hard goods with a life expectancy of more than 3 years, such as automobiles, computers, appliances, and airplanes. A rising trend has a positive effect on the nation's currency because an increased level of purchase orders signals that manufacturers will be busy in the months to come as they work to fill these orders. The usual effect is, as durable goods orders go up, the currency goes up. Our next indicator is our new home sales figures. New home sales measures the annualized number of new residential buildings that were sold during the previous month. A high level of housing activity signals that the construction industry is healthy and that consumers have the capital to make large investments. More importantly, new housing activity creates an economic ripple effect as homeowners buy goods such as appliances and furniture for their homes, and builders buy raw materials and hire more workers to meet the demand. The usual effect is, as our durable goods orders go up, the currency goes up. And the last major economic indicator we'll speak about today is our existing home sales figures. Existing home sales measures the annualized number of existing residential buildings that were sold during the previous month. The sale of a home also triggers commissions for real estate agents, and often homeowners will purchase goods such as appliances and furniture shortly after purchasing a home. Traders watch this report closely as it is the month's first demand-side housing indicator to be released. The usual effect is, as existing home sales figures go up, the currency goes up. This will conclude Lesson 4, Understanding Economic Indicators. Be sure to view our previous videos, Introduction to Technical Analysis and Introduction to Trading Strategy, to further strengthen your knowledge of the foreign exchange market.